So, hello everyone. Good morning, good afternoon, wherever you are, and welcome to today's webinar. We're happy that you joined, and I have two great speakers with me today. On the one side, we have Eric Boudet. Eric is our senior analyst at PAC. He's covering the research on cloud infrastructure for the banking and insurance sector. And on the other side, we have Jean-Edouard Kurz, consulting partner, financial services at Kyndryl. And both of them will help us to understand the banking sector's IT modernization challenges, as well as the opportunities. So Eric will start today with giving you PAC's perspective on how the IT services in the banking sector is evolving. And after that, Jean-Edouard and Eric will walk you through the results of our latest studies, where we surveyed more than 200 IT decision makers. They will highlight how financial institutions are positioning themselves when it comes to resilience, security, and regulatory compliance, and how they are leveraging emerging technologies with a focus on Gen AI and cloud, of course, to shape their modernization strategies. You will be guided through the key data points, the most urgent priorities, and the implications for the next wave of IT transformation in banking. If you have any question during the webinar, please use the Q&A at the bottom, and we will answer them after the presentation. We will have about 50 minutes to answer all your questions. The webinar will also be recorded, and it will be made available to you together with the slides afterwards. And while we wait for the last participants to join, because we have some cultures in Europe that tend to be a little bit later, which is okay. Here's one question that we'd like to ask you up front. And I will start a short quiz here. Now, if you had to choose one single feature of your ideal banking information system, what would it be? Now, I'll give you a couple of seconds to answer this question, and we'll take a look at it later, or just now, as I hand over to Eric to start with his part. Thank you.
Thank you very much, Felix, and thank you for having this webinar. So while you answer that question and we see the results, I just want to show you this introductory picture. Basically, we asked ChatGPT to give us an idea of what, for them, would be their ideal banking IT system of the future. And I think that image is very revealing. We see the bank, which is still like a fort, large columns, very heavy bricks, but we see it completely connected. Half of it is connected, of course, to the cloud. But even if we have that connection, the cloud, that security, at the forefront is still people. And basically, I think that image really summarizes pretty much what we will say to you today, and really the main points of our survey. Because basically, out of the question you're seeing today, we don't have to choose between bulletproof resilience, agility, and innovation. We think that we have to combine the three to be the best at any single of them. So first of all, let me dig and present to you quickly PAC's view of the financial service sector over the coming years. First of all, at PAC, we measure what we call the SITS market. So it's the software, IT services, and cloud investment of of all large enterprises in Europe. And what is very important here is banking is, along with the public sector, the second largest area of investment in IT. 15% of all of the spending in Europe is done by the banking sector and financial institution. Just to give you a rough idea, the banking industry's weight in the total GDP is closer to 5%. So it just shows you how important IT is for the banking sector. And what we're seeing and what you'll see is that it's one of the first sector which is embracing Gen AI and agentic AI to modernize because IT is really critical for that sector. Secondly, even if the fundamental trends are the same throughout Europe, we can see from year to year really sharp differences in growth for the banking sector in different parts of the continent. Two ideas I want you to remember on this slide. The first one is the size of the bubble. Basically, we see that the maturity of the different market is really not the same. UK is not the largest economy, Germany is, but it still has a much larger IT service sector in the banking because financial institutions are so well developed in the UK. Germany and France have a market more or less the same size, but France has a smaller economy, showing again the importance of the banking sector in the country. And the second idea I want you to understand on this slide is that growth is really different on a short-term period. Fundamentals are the same, but can vary depending on current context. We're the most optimistic over the next 3 years on Spain and the UK. Spain, because there's some catch up, they have less digitalization and they have access to huge EU funds for digitalization of the country currently. And so investments are really accelerating. And in the UK, because there are large global financial institutions which are embracing AI, investing a lot in AI, probably faster at a faster pace than we are in the continent. At the bottom end, we see that probably France will have the slowest growth over the next couple of years. And that is due simply by the fact that one of the largest French banks, Société Générale, has announced an important plan of a reduction of its IT cost. And that bank by itself, waiting so much in the market, if it reduces sharply its investments, well, it affects the whole of the market's growth. Now, that growth is driven in all of these countries by one technology, cloud. What I wanted to show you on this slide is the IT services market growth over the next couple of years. As you see, we're on a really positive trend. Overall, we're close to 5% CTC growth over the next 5 years. But with a clear dichotomy between cloud-related technologies, whether they're cloud platforms, they're SaaS versus on-premise software, and whether they're cloud-related IT services versus legacy. What we see is clearly cloud is growing at 10% plus, whereas legacy technologies and on-premise SaaS is seeing some declines. Another key milestone we'll hit this year in 2025 is cloud will reach close to almost 50% of all spending by IT institutions in Europe. And so why do we remain so optimistic about growth and over the coming years? It's due to a couple of fundamental trends, and these are common in all geographies. The first one on dark blue is all of the digital transformation and front office work. We have the rise of new tech or tech native fintechs that are serving customers in a much different and more friendlier way. And so banks are transforming all of their digital interfaces as customer expectations change. In light blue, you have all of the back office and operations, which also necessitate a lot of transformation. And the key aspect currently, and we'll see deeper dig deeper into that later in the presentation, is how to make use of the data the banks are sitting on to do both better decision making for their own internal processes and for their customer facing view. And all of these fundamental trends are backed by one key thing, security. And that's key. We'll see it's the number one priority of all financial institutions. So all in all, at PAC, we're quite optimistic on the IT services sector for the banking sector. You have all the analysis on France, UK, different countries. All of that is available on our CTC platform. I won't bore you with this slide today, but you'll have the links when we send you the presentation later. Now, for the second part of this webinar is we'll present a survey we did in partnership with Kyndryl of 200 financial institutions in France. These are representative, more or less, of the sector. We have respondents of all company sizes. We have not just spoken to the top five large French banking institutions. We have different sectors from private banking to investment banking to insurance, and the quality of respondents was high. It means that 100% of the respondents of a survey did have a view on the strategic investments of their institution. So, and what's interesting is that if the respondents did have a view, they come from different part of a bank. There is some from which are technical, but others are more from the business managers. And this really sees that budgets currently are also spreading and are not only at the hands of IT departments, but also going to the business hands. So for that survey, we have a partner, Kyndryl, and we couldn't have found a better partner. Kyndryl is extremely strong and has deep knowledge of the financial industry. And so maybe I'll just head over to Jean-Edouard for a quick introduction of yourself and what Kyndryl does. And then we'll go ahead and to the results of that survey.
Okay, thank you. Thank you so much, Eric. I'm delighted to be taking part in the webinar. To give a quick presentation of Kyndryl. Kyndryl was born 4 years ago as a spin-off of IBM. So we're a young company, but with decades of long expertise in supporting financial services customers around the globe. As you can notice, 44% of our global revenue is generated in the financial services sector. So it represents around 7 billion of dollars. And in Europe, we have over 150 clients in the banking sectors. So Kyndryl, our day-to-day mission is to manage, modernize, innovate, and secure the critical information systems of our clients. So we've got a global organization who has over 80,000 qualified professionals with a local presence in more than 60 countries. And that enables a local proximity services and also optimized development through collaborative center around the world. So for example, in France, we have 5,000 people, 1/3 located locally, 1/3 is dedicated team in Eastern Europe, and 1/3 is in India. And we have 13 data centers spread across the country. In Kyndryl, we are continuously improving in local economy and in strategic areas. For example, we acquired Samlink, a leader in Northern Europe banking sector, to develop digital banking services and new open banking models for our clients. In May 2025, our CEO, Jérôme Calmelet, with our global CEO, announced at Choose France 100 million investment to support French economy and accelerate its digital transformation. So concretely, it means the recruitment of 300 additional experts in data, cybersecurity, the launch of an AI private cloud in Montpellier, and the creation of a cyber innovative digital hub in Sophia Antipolis. So that's a quick presentation of Kyndryl. Now the introduction is done. I give you the floor again, Eric, maybe to present the main findings of the study.
Yes, thank you, Jean-Edouard. So let's dig right into the results. One thing I haven't done is we've done a survey of 200 people, 200 financial institutions, but on top of that, we also did interviews with a couple of the largest institutions, not just to have data points, but also to have qualitative comments on the real challenges. And I want to start with one key finding or one key number, 29%. That's a very low number. and it's the number of the respondents who believe that the resilience of their IT system is currently fully meet their expectations. Most of the respondents will say, well, it partly does. But basically, there are less than a third of financial institutions which can really sleep at night. And that's, we think, a real problem and why modernization is absolutely necessary. The second question we ask is, well, okay, you want to modernize, but what are your key priorities over the next 12 months? The survey was done mid-2025, so basically these are the priorities for end of 2025 and beginning of 26. And number one, by far, is improving the security. It remains the key challenge as we have a more complicated environment, more complicated IT environment, and extreme and new tools and we've seen constantly different banks being attacked. But more interesting is not just improving security. There are some key other priorities, and the second is deploying new tools and technology. Basically, you modernize to get access to new capabilities. Because if you look at the last two answers, basically, what are the last priorities? It's cloud migration and legacy system. We've seen that cloud migration, the money goes into that. So why is it not a priority? Well, because cloud or legacy, we don't talk about tech for simply tech as it is. Every time we ask a question, is the technology important? Well, not really. What's important is all of the answers above, it's the operational outcomes that the technology brings. So it will be improving the customer experience. You don't go to the cloud for the cloud's sake. You go to improve the experience. You go to improve or optimize your cost. You go to deploy application faster and more with more agility. So basically, the idea here is you modernize for new technology, but not for the technology's sake, for operational needs. And then the question was, well, as cybersecurity is your key challenge, what do you consider the most effective measure for supporting that? And how do you go about in improving your overall security score? Well, number one, and that's why ChatGPT with our image of the bank was quite smart, is that basically employees continue to be at the forefront of everything. They're the weak point in terms of security. So training is really the key to improve security, and we need therefore a strong management, a strong governance, and all that goes with it. Only after that weak spot of employees are there more technical aspects to security, and these can be adoption of new technologies. But what I want to highlight is that study having been done in France, there's also one thing which usually when we do our European surveys have a much stronger appetite for France is the sovereign cloud solution. We do see a clear appetite for the different Google Sens or Microsoft Bleu, the cloud solution, as it's more of a political aspect than a pure security one. Now, Jean-Edouard, just to pass you the ball, we've seen that security is really the key, the key aspect for banks currently. Do you agree with that? And how do you address this? Or how do you help them having an improved security so that they sleep better at night?
Yes. We totally agree, and security resiliency is still the number one top priority for banks. And firstly, it should be noted that the vast majority of banks report having experienced a major accident last year, so affecting their information system, but also their business operation. And if we have a look to the landscape evolution, we understand why security and resiliency is still the major challenge for banks. Looking at increased regulation, DORA and I want to underline the cost associated to be compliant with this regulation, the unstable geographical landscape, in globally and in Europe, and the new and increasingly intense attack because AI is can be a friend of banks, but can be an enemy when it attacks banks. And banks are developing, as you said, new models, and these new models has to be secure. So at Kyndryl, security, is in our DNA, because every day we bear a great responsibility for the management of our banking clients' critical IT system. So building on this culture of security, we offer pragmatic services based on 4 pillars: security insurance to help our clients to be continuously compliant, maintain a balance between security and business objective. That's quite tricky from time to time. Zero trust services to protect their critical data and application, and also the distribution of this data through their organization. Security operation centers and response services to mitigate the impact of incidents with to anticipate and handle security operations and incidents. And finally, it's an obligation now for banks, incident recovery services to mitigate the impact of incidents, with the capacity to have automatic recovery capabilities for their critical processes and data. So what I think we must underline is outcome for banks to be resilient and well secure are important, because it's a combination of significant reduction of incident and response time, the guarantee regulatory compliance with affordable costs, not to spend too much cost to be compliant, and an increased resilience to cyber attacks.
Perfect. That was clear. So once we've addressed the resilience and security part, there's a clear question that goes in, is that, well, we're modernization, we're going to the cloud. Will that impact our resilience, or can we do both? And so basically we asked a very simple question: is how do you assess the impact of cloud solution on the resilience of your infrastructure? And actually, 2/3 of our respondents say that a right migration done right with the right workloads on the right cloud, we'll see hybrid is the key. Well, 2/3 of our respondents say that actually cloud is not a risk to resilience and can actually be even positive if done well. And barely 19% of our respondents see it as a risk and will probably continue having a majority of private and sovereign cloud. Well then, cloud, not a problem for security or resilience. It can help. Why do you go? What are the reasons? And when we ask, why do people go to the cloud? Why are financial institutions migrating? Well, the first one is access to technology tools. They want to have access to the hyperscaler services. They want to have access to the latest AI models. And only the financial part of it, reduction in IT cost, that can be true on a like-for-like basis. But what we've seen is when you migrate to the cloud, usually you use more services. And so if it's an objective at the beginning, usually it might not wind up and such really a reduction in IT costs, but you'll get more services for a slightly increased price. And if we look at the future, what's interesting is that today we ask, where are your workloads? Public, legacy mainframes, or private cloud? And what's very interesting, it's more or less a third, a third, a third. But even more interesting is that tomorrow things or the ratios should not move by much. The idea is that financial institutions want to be able to have the access to the public cloud for the latest tools, for the latest services. But that cannot be for all of their workloads. That cannot be for all of their most sensitive data. So it will have to work with legacy, with private, and the way to go is not full private or full public, but it's the right workload at the right place. Do you agree, Jean-Edouard, that hybrid is really the best of both worlds? And how do you address a bank that wants that kind of a hybrid architecture? How do you manage that?
Yes, yes, yes. You know, hybrid, Eric, you're totally right, has become the norm. And at Kyndryl, we know exactly how to implement and manage different cloud model, whether it's cloud as a remote data center, a native hyperscaler model. Couples of fintech companies have adopted this model, such the very well-known now Revolut. But most of banks are moving towards hybrid cloud. And as you pointed at the beginning of our webinar, banks are all investing in the advantage of cloud native. To manage the complexity of being multi-cloud, we helped our customer to implement platform engineering approaches. This kind of approaches, platform engineering, empower their developer communities while reducing cost and time to market. We also provide observability platform, Kyndryl Bridge, that can provide real-time visibility and orchestration of multi-cloud system. It's embedded AI-driven automation and insight from that brings continuous improvement. We'd say the outcome to be great at hybrid and cloud native is to develop infrastructure, banking infrastructure that fosters, as you said, innovation and facilitate the adoption of artificial intelligence. That is a huge, 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 huge challenge.
Okay, fantastic. Now the next part of our did not look at really cloud, but looked at what are the factors to successfully transform as a financial institution. What are you looking for to successfully transform, modernize your infrastructure? And basically, as we've seen already, rapid adoption of new technologies is always at the forefront, and banks are leading in all of the sectors and have already quite a few use cases. But what's interesting here is that number two answer is planning and management is also key. We're not talking just about technology here, but we're talking about choosing the right partners, choosing the capabilities to do change management organization, doing training, as we see that we're lacking some skills and new technologies. And so that planning is almost as key as the technology underneath it. As for Gen AI, we've seen banks are embracing it, but how advanced are they? Well, we tried to measure that with two questions. The first one is, how advanced are you? Do you have already Gen AI solutions that are scaled at scale, and are some of them industrialized? Basically, what we see is that 40% of our respondents and all of the large ones, or almost all of the large ones, had already implemented at scale quite a few number of projects. The largest French banks are even talking publicly of over 100 solutions each. And barely 11% hadn't studied the subject yet. And these are usually the smallest ones or the most regulated ones. But what's interesting is if everyone is doing projects, 89% of them are doing projects, not all of these Gen AI projects are actually delivering results. And basically what we're seeing is that barely between 20 and 30% of them are going into production and are being scaled. So the key is often we say, well, the key is identifying the right use cases for Gen AI. Well, no, the one is identifying the right use cases that can be scaled. Scaling is often right now the bottleneck, and not all projects go. But even if you have a hit rate of 30%, the recommendation is clearly to go with it. So how banks are using that, for what reasons, or the most common implementation of Gen AI? Well, it's to improve fraud detection, to improve operational efficiencies. Why these two? Because the outcomes are the most measurable and they're quite direct. Whereas improving customer relationships or new developments, then the ROIs are much harder to measure and so are not as developed. So all basically AI is well adopted and Gen AI well adopted by banks. And how do you see that? Do you see that same trend, Jean-Edouard? And how can you help financial institutions embrace these solutions? We can't hear you, Jean-Edouard. Or yes.
Excuse me. Okay, yeah, totally right, Eric. Thank you. AI, as you said, for banks is a strategic reality. And you know, Kyndryl, we were yesterday and Tuesday at the Adopt AI Summit in Paris, and the momentum is impressive. All the banks were there, were present. They, as you said, they are all investing in AI, but they do admit that they do not yet see all the benefits of it. And the vast majority of the leaders recognize also that the adoption of AI by their organization at scale is still a very, very big challenge. So that's why in Kyndryl, we developed the Kyndryl Agentic AI framework to help our client to become AI native and to transform their investments into real core business capabilities. So if I can present very quickly this Kyndryl Agentic AI framework, at the foundation of it, you see the agentic core. It's a secure by design capability that orchestrates, secures, and scales AI agent throughout the organization. On the left, you can see the agentic ingestion. It's a process that extracts and analyzes a customer's entire technology estate, including policies, processes, data stream, workflow, and that's very useful because it uncovers hidden complexity, integration challenges we will have to handle. So, and this agentic ingestion was developed based on our Kyndryl Bridge solution, which I mentioned earlier. The agent catalog and industry architecture provides a library of validated agents and proven blueprints. These resources can help an organization, a bank, to determine whether their current state should be transformed or not into an enterprise-grade agent or just some modern code. On the right, the agent builder, for its part, just design, engineers, and deploys modern system and agent tailored to each business line. That's important. An important and critical element is the framework is the future workforce model, because this model defines the roles of agent and the roles they will play in the organization and how they will collaborate with every employees. And finally, governance, orchestration, responsible AI are integrated throughout the organization and to ensure transparency, compliance, agility, for sure, fairness, that is very important to build trust within your organization, and to ensure to always have a man, and a woman in the loop. So it's talking about ethics. So these governments integrate the ethics rules also.
Okay. And finally, we've talked about security. We've talked about migration to the cloud. We've talked about Gen AI. All of these means that we need new skills. DevOps for cloud, data Gen AI engineers, prompt engineers for Gen AI. And so, how do financial institutions cope with these or get these new skills in an environment where they are usually rare and we have a high turnover? Well, that's something that really has changed over the past 12 months with Gen AI driving, is that an increased use of IT service providers. Actors like Kyndryl, and I know many of you on this call are IT service providers. Well, you have here a clear opportunity. You have the experience, you have quite a few assets that are being looked at, and you can really bring added value, not just talking about the technology, but how can the technology bring value to operational processes. And so basically, we asked the financial institutions, what are you looking for? What are the importance of different criteria when you're choosing your provider? Why would you choose one over the other? Well, cost, of course, is key. But number two, the skills, exactly. We're seeing that currently skills are needed. And so this is the number one asset. If you can put forward your skills, your experience, you have really an opportunity. And then we see that both one, technological skills, and the third answer, which are personal skills, i.e., the capability of taking these new technologies and implementing them to bring out added value to business processes. And to finish, maybe Kyndryl, how do you address these need for skills? And do you agree that you've seen a lot of appetite for Gen AI solutions and what you bring onto the table?
Oh yeah, yes, definitely. And as I mentioned, we do invest 100 millions within two fronts, and one of these investment is objective is to hire 300 talented people. So mainly in cybersecurity, AI, cloud computing. So this is a key focus area for us to have to hire, to upskill talented people locally and globally. And if we look at your survey, and thanks again for this survey, if you look at our financial or customers' feedback, we see that Kindred is on the right track at the right pace. And our objective is to provide a sustainable and profitable growth. But we are still investing, and we are very focused on our customers' needs. And banks has couples of great challenges in front of them.
Yes, clearly. Um,
Mm.
so thank you, Jean-Edouard. Just three takeaways. If I had to summarize all of our webinar, three things. Resiliency security remains the major challenge and what keeps IT departments up at night. Secondly, cloud is at the heart of the transformation. Embrace it. It's the right workload at the right area. So it's a hybrid environment, but it's not a risk. And it's actually seen as an opportunity to transform. And we actually have to be cloud native to embrace that change. And finally, well, data and AI is the engine of innovation. Banks are investing massively. Not everything has an ROI. But even if only 20 or 30% of your POCs and your trials do end up in a scalable solution, the efficiency down the line will be quite substantial. So these are the three key messages, and I think we have a couple of minutes to answer questions. You can ask them in the chat, I think, and Felix will read them out.
Fantastic. All right, let's jump right into the Q&A because we don't have much time left. There's a couple of questions, Eric and Jean-Edouard. I have the first one here from Nadine, and she's asking, so you talk about Gen AI use cases. So what about the ROIs?
I'll just start and maybe let you, Jean-Edouard. Well, the ROIs today are uncertain. We've seen some very specific areas where they're extremely strong, but what we realize is that except for a few use cases where the ROIs are easily calculated, it's extremely complex. Often the cost of the underlying infrastructure is not taken into account, for example, in a calculation. And so banks are really in a phase whereas you have a budget, invest, and we'll see there's a wiggle room. That's why we have so many of these POCs that actually don't go to scale. But the 20 to 30% of projects which actually do scale have ROIs not of 5 or 10%, but ROIs of X times and can be substantial. So, Jean-Edouard, would you have anything to add to that?
Yeah, that's a good question. And as we said, banks are still looking for the benefits of their investment in AI. But what we noticed is there are three main use cases they are investing in. So the first one, and that's the majority of the banks are investing in this one, is AI to optimize their processes and to be more efficient. And it was very interesting to hear from Société Générale, BPC, Crédit Agricole leaders in Adopt AI Summit, because they all agree that it's important to invest in their core business processes, not in the core banking business processes. So they do invest, and the agentic AI is quite, it permits to reinvent this kind of process. It's not, agentic AI is not automation. It's the capacity to really reinvent a process. So they are still investing in it. Gen AI with automation is not so performant. It helps, but not so performant. But agentic AI should change the game. The second main use cases is AI to handle, the client relationship, and it's quite an old one, because chatbot we use chatbot for a long time. So they are still investing in that, and the benefits are concrete. There's a new generation of call center who is happening. So with AI interaction, more chatbot, it's very efficient for the customers. So
we agree, basically, some use cases with very high ROIs, and
okay.
others
and the last one that banks are not investing so much so far, but insurance does, is AI, integrated to their product and services. So this is quite an innovation to develop, because insurance are starting to provide new kind of services thanks to AI to their clients. Banks are not developing so much new services, but based on an open banking platform, it will be more and more easier and possible for them to build these new product and services for their clients.
Fantastic. All right. Thank you both. There's two more questions. I'm not sure if you can tend to both of them.
Yes, we'll try quickly. Go ahead.
There's one from Annie. She's asking, from your experience, are banks going to open source or more vendor-based solutions?
That's a good question. As we said, we are developing platform engineering approaches to permit the developer communities of banks to be very efficient in developing new banking services. And this platform, we've done that for one great bank within France. We deploy this platform engineering in full open source technologies. So that's always a question for a CIO to do. Okay, it needs a bit more investments to implement the platform, but you prevent yourself from any vendor locking. CIO are looking more and more of open source technology. So I would say every time it's a good thing to ask himself if it's a good choice to do full open or with a vendor technology.
And Felix, quickly, the last one. I'll try to get my hands on it.
Yeah, so the last one is from Christoph. How do you reconcile the appetite for Gen AI with sustainability targets?
Well, that's a great question. We will not be able to do everything we want with LLMs. That would mean an explosion of CO2 production and the need for new data centers. We will need to try to have SLM and agentic AI. I think the future will be that it will be much smaller model adapted to the workloads. And even then, that will be a challenge. If banks really want to develop AI at scale, it will put their sustainability targets at risk. Microsoft is a large actor saying that, well, AI has put our 2030 targets also at risk. So the real idea will be doing it in an eco-friendly way with the smallest model possible, which are made efficient for each tasks. So orchestration of agents, which each use the perfect SLM and not LLM. It's part of the solution, but that even that won't resolve anything. It's a key issue, not just for banks, but for the planet as a whole, should I say.
Yeah, right.
Great.
A pragmatic use case with AI concerning sustainability within our infrastructure, we develop AI to better manage the life cycle of infrastructure. So we can save money. We can so.
Yeah, try to compensate partially by using AI to
Exactly.
improve. Yeah, of course.
Exactly.
Mitigating factors.
Mm.
All right.
Great. Thank you very much, Jean-Edouard. Thank you, Eric. Dear participants, if there are any questions, if you like to discuss this topic further, please feel free to reach out to us anytime. We're happy that you joined today, and we look forward to the further discussions with you. Have a great day, and goodbye.